Imagine living in a place where clean water is hard to find. Across India, millions of families face this every day. But right now, some incredible Indian companies are leading a water revolution. They are developing smart technologies, building innovative treatment plants, and making sure both cities and villages get safe and reliable water. In this video, let's discover how these water revolution companies are securing our water for tomorrow. I have divided the water segment into 5 subcategories, as shown in the chart, and we will be analyzing companies across each of them. In this episode, we'll look into the key companies of water treatment, water infrastructure, and water pumps and equipments. And guess what? There are many major companies actively working on the water revolution. We'll start our analysis with Thermax Limited. From turning algae-filled ponds into pure process water, to building factories that send zero liquid waste back into the environment, this is the story of Thermax. Thermax Limited is a Pune-based engineering company delivering solutions in clean energy, clean air, and clean water across more than 90 countries. The company shows stable short-term price weakness on the one-week chart amid longer-term underperformance, but backed by solid fundamentals. The company's compounded sales growth remains robust at around 11 to 15% annually, with stronger compounded profit growth due to margin expansion and operational leverage. Its ROE of 13.38% reflects decent profitability and efficiency in utilizing equity capital. As shown, it has a market capitalization of about 39,500 crore rupees, approximately $4.2 billion as of September 2025. Key segments like industrial products, green solutions, and water and waste solutions. Return on equity, ROE, in the 12 to 14% range, dividend yield of around 0.4%. The industrial products segment, which includes boilers, heating systems, and environmental solutions, contributed around 42% of this business. Profits in this segment rose sharply, from 274 crore rupees to 397 crore rupees in just 1 year. Water as a growth engine. The Water and Waste Solutions division is expected to cross an order book of 1,000 crore rupees this year. That's nearly 10% of Thermax's overall revenue, making water a serious growth engine for the company. Recent orders and future plans. As of June 2025, the consolidated order book stood at 11,376 crore rupees, up 7% from last year. New orders in just that quarter totaled 2,748 crore rupees. To meet water demand, the new Pune Water Solutions plant will manufacture RO units, sewage treatment plants, effluent recycling, zero liquid discharge systems, and CDI modules. In green energy, Thermax's subsidiary bagged a 500 crore rupee order to set up 5 bio-CNG plants across Rajasthan, Madhya Pradesh, Maharashtra, and Uttar Pradesh. On the global front, Thermax Babcock & Wilcox secured a 513 crore rupee contract in Botswana for a 600-megawatt power project. And strategically, the TSA acquisition and new chemical ventures point toward a push into high-margin, specialized water markets. VA Tech Wabag Limited, a pure-play water technology company. With over 100 years of experience in operations across 25 countries, Wabag is one of the global leaders in sustainable water and wastewater treatment. What do they actually do? They design, build, and operate everything from municipal water plants to industrial desalination, water recycling, and even zero liquid discharge systems. They're also tapping into green hydrogen and biogas projects. VA Tech Wabag Limited has shown a stable trading performance in the recent one-week period, with minor volatility and sideways price action, indicating market consolidation. Fundamentally, the company demonstrates strong compounded growth in both sales and profits, with sales growing roughly 10 to 15% CAGR, and profits around 20% CAGR. Its ROE near 13 to 15% indicates solid profitability and capital efficiency. These factors highlight VA Tech Wabag as a fundamentally sound company with growth potential sustained by its operational focus in the water treatment sector. Its current market capitalization is around 9,600 to 9,700 crore rupees. Key financial ratios indicate a return on equity (ROE) of roughly 13 to 15%, a modest dividend yield approximately 0.26%. The company has low debt to equity approximately 0.17 times and a PE in the low 30s. Revenue grew at CAGR approximately 10% over fiscal year 21 to fiscal year 25, with sharper acceleration in last 2 years owing to improved order inflow and execution. EBITDA and PAT margins expanded from 8%/3.9% FY21 to 12.8%/9% FY25. EPS and book value. EPS doubled in 3 years, underlining true per-share profitability improvements. Cash flows. Net cash position, as of March 2025, stood at approximately 7,056 million rupees, with operating cash flows remaining positive for 5 consecutive years. Recent major orders. In the last year, Wabag bagged key projects like a 46 crore rupee solar cell plant order in Hyderabad, a 380 crore rupee water project in Bengaluru, repeat contracts in Bahrain, and even a $272 million desalination project in Saudi Arabia. These wins strengthen its pipeline and expand its global presence. Future outlook and plans. Management targets 15 to 20% revenue growth with stable margins. Wabag is now focusing on high-tech water solutions for semiconductors, solar, and green hydrogen. By 2028, it aims for an equal split between Indian and overseas business, while also scaling its recurring O&M services. VA Tech Wabag is fully focused on water infrastructure, from municipal projects to desalination and industrial treatment. As of fiscal year 2025, its order book stood at approximately 13,700 crore rupees, more than 4 times its annual revenue, giving strong visibility for the next few years. Major clients include government bodies and big industries, and management expects the backlog to grow further. Ion Exchange India Limited is a pioneer in water and environment solutions, with over 60 years of expertise. From building massive industrial treatment plants to delivering resins, membranes, and even everyday water purifiers, the company serves industries, cities, and millions of homes. With projects spanning India, the Middle East, and Africa, Ion Exchange is shaping the future of clean water and sustainability. Ion Exchange India Limited stock price in the last week has been stable with low volatility, but trading below major moving averages, indicating cautious sentiment. The company posts steady but moderate compounded sales and profit growth with ROE around 10 to 12%, reflecting stable operational performance. These fundamentals align with Ion Exchange's role as a mature player in the water and environment management industry, focusing on consistent performance over rapid expansion. Latest market cap: 50.87 billion Indian rupees as of September 12, 2025, around 6,200 to 6,300 crore. The company's return on equity has been healthy ROE, approximately 18 to 19% in the latest year. The business is organized into 3 segments: engineering, chemicals/resins, and consumer products. It pays modest dividends. For fiscal year 2023 to 2024, the board recommended a final dividend of 1 rupee 50 paise per share face. Over the last 3 years, Ion Exchange has shown steady growth. Revenues climbed from about 1,577 crore rupees in financial year 22 to 2,738 crore rupees in financial year 25, while net profit moved from 163 crore rupees to 208 crore rupees in the same period. But here's the catch. Margins have slipped from around 14% to nearly 11 to 12%, mainly because of rising costs and project expenses. In fiscal year 24, profits stayed flat at 195 crore rupees, despite an 18% jump in sales, showing how tight margins have become. And while FY25 sales are strong, quarterly numbers also revealed cash getting squeezed, with reserves dropping to multi-year lows. Ion Exchange is all about water. The company designs and builds sewage plants, effluent and ZLD systems, desalination, and recycling units, along with long-term O&M services. It also makes resins, membranes, and specialty chemicals that power these solutions, and sells water purifiers to homes and institutions. In fiscal year 24, engineering made up 62% of revenue, chemicals and resins 26%, and consumer products 12%. With a full water cycle approach, from drinking water to wastewater reuse, Ion Exchange has built one of the strongest positions in India's water solutions industry. Enviro Infra Engineers is a rising star in India's water infrastructure sector. The company builds and operates sewage plants, water treatment facilities, pipelines, and zero liquid discharge systems, delivering end-to-end solutions for cities and industries. With projects across multiple states and a growing order book, Enviro Infra is fast becoming a key player in solving India's water and wastewater challenges. Enviro Infra Engineers Limited has exhibited strong positive momentum in the recent one-week stock price, with a gain of over 5%, supported by solid quarterly earnings growth. The company's fundamentals highlight a remarkable compounded sales growth of roughly 50 to 55%, and profit growth exceeding 100% CAGR over 5 years. An ROE of around 27 to 35% reflects outstanding profitability and capital efficiency. These factors position Enviro Infra Engineers as a high-growth company with strong operational performance in the water treatment and environment infrastructure sector. Market capitalization: approximately 4,569 to 4,600 crore rupees, mid-2025. Business and operations: 100% focused on water/wastewater infrastructure. Enviro Infra designs, engineers, constructs, and maintains municipal and industrial water projects. Return on equity is strong. Consolidated ROE approximately 27% in FY 2025. The company has not paid dividends in recent years, 0% yield. In just 3 years, Enviro Infra Engineers has seen explosive growth. Revenues jumped from about 334 crore rupees in financial year 23 to 726 crore rupees in financial year 24, and then crossed 1,066 crore rupees in financial year 25. That's more than 120% growth in just 2 years. Operating profits kept pace, with EBITDA climbing from 50 crore rupees to 268 crore rupees over the same period, while margins stayed healthy at around 23 to 25%. Net profit nearly tripled, moving from 56 crore rupees in FY 23 to 177 crore rupees in FY 25, a 67% jump last year alone. EPS also improved too, 11 rupees and 76 paise. Enviro Infra Engineers holds an order book of 2,000 plus crore rupees, with over 1,100 crore rupees of new wins in 2025, including major sewage and ZLD projects. By fiscal year 26, it's aiming for 2,500 crore rupees orders, expanding into new states and adding green initiatives like solar and biogas. But risks remain: rising debt, stretched cash flow, and dependence on government contracts could impact performance despite healthy margins. KSB Limited is a leading Indian manufacturer of pumps, valves, and related systems serving water, power, oil and gas, industrial and infrastructure customers. It sells engineered pump packages, industrial valves, and provides after-sales service KSB Supreme Serve. The company is well diversified across end markets: water and irrigation, power, industrial, infrastructure. KSB Limited shows positive short-term price movement supported by stable fundamentals. Its compounded sales growth of 7 to 10%, profit growth of 10 to 15%, and ROE near 17 to 18% depict a solid, steadily growing mid-cap industrial company in the pump manufacturing sector. This combination underpins sustained financial health and market confidence. Market cap, mid-September 2025. Approximately 15,000 to 15,200 crore rupees. Return on equity, ROE, approximately 17 to 18% latest year, a healthy return level for the sector. Dividend, latest declared final dividend 4 rupees per share. KSB's revenues rose from approximately 2,250 crore rupees in 2023 to approximately 2,530 crore rupees in 2024, and profits are roughly 250 crore rupees. Backed by steady margins, strong after-sales services, and a generally low-debt balance sheet. KSB's core is pumps and valves, engineered centrifugal pumps, multi-stage pumps, boiler feed pumps, submersible and sewage pumps, and after-sales, service, spare parts, maintenance. Key end markets: power, water, and irrigation, oil and gas, mining, and industrial process. KSB has been winning key projects, including a major boiler feed pump order for NTPC's supercritical power plants via L&T, and large solar water pump contracts in Maharashtra. Steady order inflows across pumps, valves, and services are driving healthy revenue conversion in 2025. But it is important to note the risks. KSB depends on cyclical industrial capital expenditures. Large projects carry execution and working capital risks, and the stock trades at a premium valuation. If you found this helpful, show your love by liking this video, and let me know in the comments if you'd like to see a part 2, where we'll cover more exciting companies shaping the future of water.